Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news prices are jolting higher for both hard and soft commodities. But first, new orders for US durable goods came in with a very disappointing result in March, up just 0.5% when a strong 2.5% result was expected. Orders for non-defence capital goods fell a worrying 4.7%. These results are a little curious given the strong PMIs and the upbeat regional Fed factory surveys. In fact, the Dallas Fed reported results for its region for April, and that revealed very upbeat factory conditions and with a strong outlook. The latest US Treasury 5-year note auction for $61 billion was very well supported, with $141 billion of bids. China's largest distressed debt manager, China Huarong, has announced it will miss another results deadline, further unsettling bond investors and raising fresh concerns over a potential default. The company owes bondholders the equivalent of $42 billion, with $17 billion of that falling by the end of next year. And Singapore's industrial production in March also came in with a disappointing result and well below expectations. The year-on-year result was pandemic affected, but the gain from February wasn't flash at all and developing a softening trend. Without strong gains in their electronics industries, this would have been a terrible overall result. And prices for hard commodities are rising and actually approaching levels of the last commodity supercycle. Prices for iron ore, aluminium and copper are at decade highs. Copper, a bellwether for the global economy, rose as much as 2.4% on Friday, up to $9,780 a metric tonne, the highest since August 2011. And this trend may only just be starting, juiced along by global stimulus and further by the transition to the decarboned economy that will result in vast amounts of copper being needed. Worldwide, crop prices are also soaring, with bad crop weather in key producing regions the major culprit, especially in North America, South America, Russia and Europe. It comes as Chinese demand is high and getting higher. Jolting food inflation is on its way too. The US Treasury 10-year yield starts today at 1.57%, up 1 basis point overnight. And the price of gold starts today at $1,780 an ounce, and that's up $3 since this time yesterday. And oil prices are little changed at just on $62 a barrel in the US, while the international price is just under $65.50 a barrel. But in between, they have been weaker. And the Kiwi dollar opens today at just on 72.4 US cents, and a gain of almost 0.5 cent since this time yesterday. Against the Australian dollar, we're marginally softer at 92.8 Australian cents, and against the euro, we're stronger as well at 59.9 euro cents. That means our trade-weighted index is up to 74, and it's strongest since mid-March. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.